Okay, let's get started. Hello there, everyone. My name is Tapio Pesola. I'm the Investor Relations Manager here at F-Secure. I would like to warmly welcome you to our Q2 webcast today. With me today I have our CEO, Samu Konttinen, who will next run through the financials from the previous quarter. And after Samu's presentation, there will be again time for questions, at which time we'll allow you to unmute yourselves. Okay, so thanks for joining us today, and Samu, the floor is yours.
Thank you, Tapio. Hello everyone from my behalf as well. So starting off the Q2 2018 interim report, pretty much stating the key highlights of the previous quarter of F-Secure definitely was the acquisition of MWR InfoSecurity, which is a great strategic fit for F-Secure. It greatly augments and complements our cybersecurity offering, both for what comes to detection and response and forensic technologies and services, and also professional services delivered in cybersecurity. So that really was a major milestone for F-Secure, and it was by far the biggest acquisition we've ever done, and therefore we raised that definitely as a key event from Q2. The second one is the corporate security revenue growth. That was 8% in Q2, and that was a clear disappointment compared to our own targets. And I'll elaborate a bit more on the corporate security performance and obviously the consumer security and overall group performance and profitability with the next few slides. And now the agenda for today. So we start with the key takeaways, then talk a bit more about the MWR InfoSecurity acquisition, how that fits to F-Secure strategy, and what are the key assets that we gained from the deal. And we will look at the Q2 performance figures, business update, and the new outlook that we are issuing as a market guidance today. So really the key takeaways from Q2 is again to repeat the acquisition of MWR InfoSecurity. That really is a major milestone for F-Secure. It's a deal that we announced already during June, but the deal was closed in the beginning of July, and therefore all the numbers from Q2 are fully exclusive of MWR InfoSecurity acquisition, but given the strategic fit, the size of the acquisition, it still definitely is a key takeaway from Q2. Then looking at the corporate security, so the revenue growth there, as I said, was below expectations, and specifically in the endpoint security new customer acquisition. So that really was the soft part of the quarter. Then looking at the rest of the components within corporate security, as an example, endpoint protection renewals. So we really had a strong quarter with the renewals, and also the new products like F-Secure Rapid Detection Service and Radar, our vulnerability management, and equally as cybersecurity services, we continued having a good quarter on those fronts. On the consumer security, the revenue, although in decline, was very much as expected, and that is because the previously communicated customer loss in one region that largely explains the decline. And on the profitability side, so excluding the acquisition-related costs, we landed EBIT very much according to our own plans. So this is proceeding as planned, and I'm very happy with our operational rigor with cost management. So we are keeping the cost in good control, although the top line was a little bit on the soft side, and still managed to land profitability-wise where we wanted. And at the end, we are now issuing a new outlook for the rest of the year, and really the key logic for issuing the new outlook is to include the numbers of the acquired company to the mix if we wouldn't have acquired MWR, or if we wouldn't have done any significant acquisitions during Q2 that will impact our Q3 and Q4 performance, we would have repeated the previous outlook. And this is very important to understand that despite weaker than expected revenue growth in B2B, 8%, we still remain very confident that the full year view for our B2B business to grow above 15% is very much valid, similarly as the validity of the previous profitability guidance, and also the previous guidance of our consumer business to stay at the previous year's level. So the new outlook is driven only because to include the numbers from the acquired company. And now looking at the key figures here, so here you see the results and the change now for the previous quarter and also for the first 6 months of the year. So revenue 0% growth. A big factor before the flat revenue growth is obviously that the consumer security, which represents about 54% of our overall revenue, so the consumer security being in 5% decline as planned, and the corporate security not growing exactly as fast as we anticipated. And now we look at the performance for the first 6 months of the year. So the revenue growth 3%, corporate security being 12%, and consumer security -4%. We are now also issuing a new set of profitability metrics. So previously we've been disclosing and guiding our capability to deliver EBIT, and so the EBIT guidance for the year was 8 to 12 million, and today we are additionally disclosing adjusted EBITDA and adjusted EBIT, and this is just to offer more transparency and more granularity that is driven with the rather significant acquisition, and really the driver behind these adjusted numbers, as an example, adjusted EBITDA, which will going forward be the one that we are guiding, is to provide investors and visibility what the so-called normalized profitability of the company would look when those costs that are born because of the acquisition would be excluded. So that is really the driver to provide as much as possible comparability to numbers prior the acquisition. And now on the deferred revenue here, you see as an example that we continued growing there pretty well. So double-digit 10% growth in deferred revenue. That talks about the sales performance predominantly on B2B side, and earnings per share as you see here. So very much impacted with the low profitability. And at the end of the quarter, so very strong position with cash and financial assets, and now in the Q3 when the acquisition of MWR closed, so obviously that will change quite a bit going forward in Q3. And personnel at the end of period, we are 1,200 people, and that is about 100 people more versus what we were a year ago. So continue investing in growth and continue hiring more people. And now let's look a little bit about the MWR acquisition and how that really complements the F-Secure security stack, how that makes our offering stronger, how it augments and complements the existing assets that F-Secure carried. So if we start from the anti-phishing behavior management, which is something that we totally lacked previously. And MWR carried a very interesting solution there called FIST, and it is an interesting market. So still today, if you look at the attacking vectors, email still after all these years continues being possibly the primary, the biggest threat vector, the biggest attacking vector for the bad guys. And it's very often that it's not the lack of technology that is preventing companies to protect themselves, but it's really the lack of education, the lack of understanding what these attacks look like. And therefore we are very interested about the outlook that this anti-phishing behavioral management solution can bring to F-Secure, and how that complements our endpoint protection solution overall. And then additionally to our existing endpoint protection suites and breach detection and proactive detection capabilities that we have with the rapid detection service, the Countercept is really one of the crown jewels that we got from MWR InfoSecurity. It is one of the most advanced threat hunting platforms out there, and a lot of very demanding premium level customers are using Countercept just to ensure that they detect early on the infiltrations, and it also provides them automated technology, automated capabilities for remote forensics and remote incident response. And these are the areas that are typically very labor intensive, and it's very important that we have this platform through which we can automate and improve a lot of these processes that are very critical for companies who have been attacked. And then on the cybersecurity services front, an area where F-Secure had its own assets and capabilities prior to acquisition already, while predominantly in the Nordics. So this really adds to our market reach and our overall our business scale on that front. And if we now look at how we are positioned globally to really work with the global organizations, the most demanding verticals in finance, as an example, and many others. So we now have coverage in the United States. We have strong coverage in Europe, locations in London, in Copenhagen, in Helsinki, and in Poland. And then added with location in the Asia, in Singapore and Johannesburg, covering the Africa here. So we really are capable of helping global customers, serving our customers at multiple locations, serving our customers across multiple time zones. And there really aren't many companies out there today who would have that reach and that capability in cybersecurity services. So I'm very pleased with the positioning and the strength of the offering that this MWR acquisition brings to F-Secure. And then really looking at the market environment and how F-Secure differentiates is really how you combine man and machine. So it's really the synergy with the professional services and the product business that is the spearhead of F-Secure differentiation and the F-Secure strategy going forward. So it really is very important. How do you make sure that you continue developing best of breed products to protect your customers from the vast range of internet threats, from the modern stealth mode attacks, and often really to gain that understanding and to gain that visibility those attacks, you need to be working also on the front line, working with the customers. And as we provide professional services on that front, as an example, incident response and forensics, we really have that visibility and that threat insight from the front line that we can transfer to our products, and how that really complements and drives also the product sales and drives F-Secure brand as one of the leaders in cybersecurity services and cybersecurity advanced products, really to protect those organizations who settle for nothing but the best. And then a little bit summarizing now on the corporate security front. So revenue grew by 8%. and it really was the endpoint security new customer acquisition that was the soft part. That's an area where we absolutely need to be picking up the pace again and continue investing on that front. Whereas at the same time, the renewals are really at their highest levels. So this is one of the positives of the quarter. So the customers continue using F-Secure products. The renewal rates are as high as they have ever been. So that obviously speaks about the quality of our products, quality of our service, and then the quality of our sales operation to make sure that we capture the renewals opportunity. And some of the reasons, as an example, to offer some additional color behind the softness in endpoint security, as an example, is the GDPR implementation. So we just saw that many companies were really busy during the Q2 finalizing their compliance with GDPR, and many other IT projects were put on hold. So that's one thing. The second thing is that what we call EDR confusion. So many customers today using EPP, they are somewhat confused which EPP vendor they should be using, or should they be complementing the EPP with the EDR solution, or should they be using EDR solution only and no endpoint protection at all. So we see actually a lot of confusing in the marketplace, and confusion typically just delays the decisions, and we believe that this was one of the impacting items to explain our soft EPP new customer acquisition. Rapid detection service, that really is the spearhead of F-Secure growth, and we continue winning a lot of major customers at various verticals, so be it the finance or critical infrastructure or energy or travel or IT management, and just a very broad range of customer verticals. So we continue winning customers there, and actually the funnel development in Q2 was better than what we expected, and that is really important that we continued witnessing the momentum with the funnel creation, and that strengthening funnel gives us a lot of confidence going forward. So we need to be now reeling in those deals during Q3, Q4, and next year to continue driving growth for rapid detection service. And that really continues being a very attractive marketplace, and more customers are looking the right solution to detect the targeted attacks, and more customers understand that they cannot have sufficient cybersecurity capabilities in-house, so they look for those companies to whom they could outsource the detection service, and that's why this managed detection service is such a dynamic and fast-growing marketplace, and continues being the absolute core focus for F-Secure going forward. Then F-Secure Radar, our vulnerability management solution, it continues its good run as well. I'm especially pleased how we see our broad reseller channel across more than 20 countries, and about in total 6,000 resellers we have. So how that broad channel is capturing that operation, capturing that opportunity to sell vulnerability management to their customers, and it really is the channel that eventually will drive the scale and gives us the leverage that we need. It's still early days, so F-Secure Radar still is very much in its infancy for what comes to commercial penetration to our customers, but we are seeing a good momentum, and we have a very positive outlook going forward. F-Secure Radar to complement our endpoint security and rapid detection service portfolio. And last but not the least, on the product front, so we are working hard and and we will be announcing and launching our EDR solution towards the end of the year, and the first customer pilots are ongoing. And the feedback we get from the customers, the feedback we get from the channel, feedback we get from the service providers is that this really is meeting the mark of the customers. So we are really looking forward how that will further accelerate the F-Secure top line going forward. Whereas although as the product is announced only latter part of this year, so the financial impact this year will be more moderate, but very important going forward 2019 and 2020. And then on the cybersecurity services, so the demand continues being very, very strong there. So, and we've been quite successful on continuing hiring new talent, growing the business, growing our delivery capacity, and the order intake wise, the quarter was not as strong as the previous quarter. So there's some seasonality and other items impacting the order intake that was in slight decline, whereas revenue of cybersecurity services continued growing fast, and with the revenue growth we are very satisfied with the business performance. And then excluded the MWR acquisition, this business is predominantly Finland, Denmark, and UK. Now quickly about the consumer security. So this is down by 5%, and as elaborated earlier, so very much as was anticipated. So the revenue decline is because of a major customer loss that happened last spring. So it is impacting practically the Q2, and the impact continues being partially visible also in Q3 this year. But after that, the comparable numbers are equal. And we believe that this business to continue performing as we have guided it. So excluded that one operator channel partner loss in Latin America, the operator channel is very stable and very positive signs at many fronts. The F-Secure Sense software, which is our router security offering, this is a very interesting new market that is developing. So we have several customer cases where we are negotiating with operators how to embed the Sense whole digital home security capability to the operators' routers. And we see many operators are really looking how would they be providing more advanced security to their consumer customers, to the households, really protecting everything that the IoT brings, not only the laptops and the PCs, the smartphones and the tablet, but everything that is connected to internet, be it your smart TV or gaming console or everything. And this is an interesting and developing market. And given that we have the operator partner ecosystem of about 200 operator partners, I think we are very well positioned to capture that market opportunity going forward. And direct sales in consumer business, which is a significantly smaller piece than our operator channel, that really continues pushing the boundaries. That the market is not a fast growth market, but we continue growing, we continue driving the business and continue outpacing the market, which is a really strong signal. It means that we are winning market share. We have been very focused in the Nordics, and we will continue with that focus. We see that the growth is driven primarily with an increased average revenue per user. So we see increasing amount of our Safe customers upgrading to F-Secure Total, which is a commercial bundle of Safe and Freedom. Freedom now being the privacy and VPN solution, and vice versa. More and more those customers who initially just subscribe for Freedom, the VPN and privacy solution, we see that they want to augment their security to add F-Secure Safe, which is our award-winning internet security suite. So that the industrial logic, the dynamics continue working there very well for F-Secure. And also last year the direct sales, we saw a very strong numbers in Q2 last year due to WannaCry. So although WannaCry and these major incidents are not directly impacting consumers, but the reality is that they create so much media exposure that typically also drives the consumer business, and therefore the comparable numbers last year are, I would say, abnormally high. So our direct consumer sales Q2, it grew less than we perhaps had anticipated, but the comparable numbers from a year ago is the main explanation there. Overall, we continue being very satisfied with our direct consumer business. And then here, looking at the graphically, you see that the performance across different revenue streams. So as I said, so our B2B revenue growth of 8%, that was clearly a disappointment for F-Secure. However, I think it's very important to highlight the fact that although the quarter was softer than what we planned, so we are very much sticking to our original guidance of guiding the B2B business full year growing more than 15%. And the only reason that we are issuing a new guidance is to include MWR revenue numbers to our business mix. So without the acquisition, we would have kept the revenue guidance of 15% despite the softer 8% growth in Q2. And same goes for whole revenue being flat this month, and I already explained the rationale behind the -5% in consumer security, which we believe will start to improve towards the end of the year, as we have guided the consumer business for the full year being at the same level as previous years. So and that guidance will be unchanged. So we continue thinking consumer business being at the previous year level. So therefore expecting much stronger Q3 and Q4 than what we now saw in Q2. And here the graph gives you an idea how the deferred revenue performance looks like and how it's been in the past. And I guess this adds a bit of color to our top line performance. So here you see that although in revenue the B2B business was disappointed, but you see that the revenue for what comes to deferred revenue growth that continued being on the same level as the previous quarters. So and that really talks about the sales progress and that continues being pretty much at the level as we have expected it to be. And profitability, so we now landed 1.1 million adjusted EBIT. So this is excluding 0.6 million of cost related to the acquisition of MWR InfoSecurity. So as I said in the beginning, so on the profitability wise, if I look at Q2 and if I look at the first half of 2018, we are tracking as we planned. So despite the little bit weaker Q2 top line performance, the profitability is really as was planned. So very happy with the cost controls we have had in place and operational efficiency across the company. And now looking at the key focus areas for the rest of this year and also next year. So giving a bit of an idea, not looking at the long-term plan, the whole strategic period that expands until 2022, but really looking at the next 18 months, next year and a half, really what matters for F-Secure, where the priorities lie. So it really is continuing accelerating the corporate security growth and really successful integration of MWR InfoSecurity, because the businesses are so complementary to each other, so there is so much to gain. And really our aim is to become the leader in detection and response solutions, and really taking the helm, taking the leadership position in Europe, really being the first call in cyber incidents and the leader in detection and response solutions. So continuous growth on that front. And then it's the increased share of wallet by cross-selling and upselling. So looking at the F-Secure portfolio, so the portfolio has expanded so much during the last couple of years. So we are no longer dependent on our endpoint protection business, but we can complement that with a lot of cross-selling and upselling opportunities with rapid detection service, soon with the EDR solution as well, F-Secure Radar, FIST. So this really starts to look like a full suite of portfolio play rather than independent one-off products, and this really can be a big leverage for our growth going forward via cross-sell. And renewal rates, that really is the backbone of any business, and as I already elaborated, so during Q2 we saw really high renewal rates with our endpoint protection, and we continue believing that the product quality is there, the services quality is there, so really keeping the existing customers is the backbone and drives the financial healthiness of F-Secure going forward. In consumer security, now this year has been a weaker performance-wise because of the loss of that one major customer that we've talked about many times already, and now putting that aside, so we believe that the consumer security offers us a growth opportunity. So really driving not just F-Secure Safe, the internet security product, but really continue driving the freedom, the privacy and VPN solution, and making a strong market entry with F-Secure Sense and leveraging the 200 strong operator channel there. And last but not the least, so we will take some time to make sure that we sufficiently understand the MWR business and how do we integrate it, being pragmatic there, really looking at the customer benefits and the customer value add there all the time, and really capturing the value from that acquisition. And it will take some time for us to digest the deal. But beyond that, we will continue looking at the M&A opportunities at those areas that are strategic for F-Secure and areas where we could accelerate our strategy using mergers and acquisition as one tool. And now closing off with the outlook. So as I said in the beginning, so we are now issuing a new outlook that includes the number of MWR InfoSecurity, and that outlook is for our corporate security business to grow over 35% compared to 2017. So that number now includes the MWR, so above 35% growth in corporate security. Revenue from consumer security is expected to stay at the same level as last year. So on that front, there is no change in guidance. This was our guidance initially starting this year as well. And then on the profitability side, we are now guiding adjusted EBITDA to give an idea what the kind of the normalized profitability would look like, acquisition costs and integration costs excluded. And now that adjusted EBITDA is expected to be in the range of 14 to 18 million. And as I said in the beginning, so if we would clean this from the acquisition related cost, we would have guided EBIT being the same as was the previous forecast, between 8 and 12 million. So this just offers additional clarity, a different viewpoint to our numbers, but kind of a purely profitability wise, the profitability is expected to be the same level as we have guided before, just we are using a different metrics to track that. and M&A related acquisition and integration costs are expected to be in the range of 3.5 to 4 million. And then last, we keep our long-term outlook unchanged. So we continue very strongly thinking that the market opportunity is there, and our assets and capabilities and performance is meeting the mark for us to continue growing above 15% during the strategy period in corporate business. So the MWR acquisition doesn't change that outlook. Obviously, there is a lot of room to grow above 15%, and the whole logic of MWR acquisition was to accelerate our growth. And on the profitability wise, so we are not issuing any new viewpoint there. So we continue monitoring the situation and all the time looking at how do we best optimize the long-term value creation, what is the best mix of growth investments and profitability, and as you see currently, we are really optimizing for growth rather than short-term profitability, as we believe that the growth opportunity is there, and as we see that we have the needed traction to capture that growth and the market share win, and then going forward, as an example, if we would be witnessing a slower growth pace, we could be optimizing more towards the profitability and therefore changing the mix and changing the balance. But currently it is really geared towards optimizing for growth rather than short-term profitability. So that's the thinking there. So that's all I had from the Q2. Exciting quarter and exciting times ahead with MWR acquisition that really positions F-Secure very differently in this marketplace, and we are really one of the leading vendors in cybersecurity, being able to offer detection and response products and to complement a vast range of cybersecurity services with that. So I'm very optimistic going forward and looking at the F-Secure future.
Thank you, Samu. So now we'll allow you to unmute yourselves. There is some time for questions reserved, so if you have any now, would be the perfect time to ask them. Okay, then thank you for joining us today, and we look forward to talking to you again in November when we issue our Q3 results. So have a nice day, and thank you.